Hello, I'm Jonathan Labrey, Communications Director at the IIRC. I'm delighted that Dr. Steve Waygood, Chief Responsible Investment Officer at Aviva Investors, joins us today. As well as being a member of the IIRC's working group, Steve chairs the Corporate Sustainability Reporting Coalition. The coalition is doing so much to promote the integration of financial and non-financial information in reporting cycles, particularly in the context of major public policy developments taking place in the world today, such as the recent proposals coming out of the European Commission. Welcome, Steve.
Thank you.
We're witnessing a significant momentum behind the concept of integrated reporting globally. Why does it matter to you and Aviva investors?
It's good news, isn't it? Aviva goes back to 1696. We're running money today for companies that won't be drawing down their money for many, many years. We're also running it for pension schemes, for foundations, some of whom have a very long-term perspective. This means that we understand how the issues that integrated reporting is pointing to, questions of natural capital, human capital, as well as the mainstream issues, for example, the financial capital, the manufactured capital. Having a report that brings these together, which in some cases we now have, is very good for us as investors. We can make better valuation decisions. Running as we do, approaching $500 billion in assets under management, making better investment decisions is really all we're about.
What has been particularly encouraging is the increased interest of the institutional investor community over the past few months, and we now have over 50 institutional investors involved in our work. What do you say to those people who believe investors are still only concerned with short-term financial returns? Do investors really want to know more about a business than the financials?
Well, I say to them that not every investor is the same. At one extreme, you have the high-frequency traders. They have no idea what the company's called, let alone what the company does. It's a number on a system in an algorithm, and it just works and does its thing. So high-frequency traders, of course, they have no interest at all in integrated reporting or indeed any kind of mainstream reporting of a conventional nature, the report and accounts. At the other end of the spectrum, you have the more responsible longer-term investors, and we now have $30 trillion, in fact higher than $30 trillion, backing the United Nations Principles for Responsible Investment. They are integrating exactly the issues that integrated reporting is looking for companies to disclose into their investment analysis, into the signals that they send as owners of the companies to the boards, and into the way that they run the portfolios. So the person that said investors are only concerned about short-term financial performance, it depends on the investor. Certainly some are, too many are, but there's a significant number that are not and are looking at non-financial issues that are longer-term in nature and that will materialise in the cash flows of the company and are therefore relevant to valuation. I could expand and continue, if you liked, around how that happens.
Oh, yes, please.
So let's look at the area of labour standards or employee relations or the customer feedback figures that you get or your government regulatory track record. All of these are non-financial issues, but which chief executive in their right mind would argue that customers don't matter, that employees don't matter, that the government regulatory track record doesn't matter? Of course they do. They are, though, called non-financial. So as an investor, we don't just look at historic returns or projected cash flows. We look to see how these non-financial issues interrelate with those, particularly the projected cash flows, and recast consensus numbers if we think that's necessary. Non-financial issues can be fundamental to the company and can absolutely impact their license to operate. If you get your community relations spectacularly wrong, your license to operate can be withdrawn, depending on the business you're in.
Now you convene and lead the Corporate Sustainability Reporting Coalition at Aviva Investors. Where do you see the crossover between the coalition's work and that of the IIRC?
We're very proud to have been working with the IIRC for many years alongside them with the CSRC, with the Corporate Sustainability Reporting Coalition. Since our inception, we've been asking for a treaty from the UN member states on integrated sustainability reporting. So, in other words, a report and accounts that integrates broader business sustainability issues throughout, within, of course, the remuneration, within the audit, within the oversight section on internal controls, within strategy, within the management vision, that kind of thing. So as a coalition, we have been calling for a treaty that encourages the member states to do that. So they're not exactly synonymous, but they're very, very closely related. And as I say, it's been wonderful to have worked alongside the IIRC. We also, as advocates within Europe, have been calling for the Narrative Reporting Directive to have a particular focus on integrated reporting. So I'm slightly disappointed with what I've seen there. But actually, I think it's broadly good news.
Now that leads me on nicely to the next question, actually, because on the 16th of April, the same day that the IIRC launched our consultation draft, the European Commission produced the Directive on Non-Financial Reporting, amending the accounting directives. What's your response to the proposals?
Broadly positive. We were advocating 7 things. I won't list them here, but they are available online. It deals with 5 of them. One of the things that it doesn't deal with is that we were hoping for an explicit reference to the integrated reporting concept. We do, after all, within the proposed European Commission text, have a number of other international standards and norms referred to, which is great. So I think it's a good thing for the trajectory of integrated reporting. It will encourage more companies to be disclosing information that will help them in due course form an integrated report. It should also, because it asks for this information to be available in an annex or somewhere within the report and accounts, it will help the synchronization of the non-financial with the financial data. It is routine where we experience the main report and accounts to come out and then have to wait months, and in some cases over a year, for the corporate responsibility or the sustainability report to be issued that covers the same time period. How can we make integrated valuation decisions when the information itself from the company is disintegrated like that? So the European Commission proposal will help synchronise these data sets, and in due course the leading companies will then be in a much better place to produce a proper integrated report. Broadly good news.
And finally, what do you see as the long-term vision for integrated reporting?
Well, I actually think of this much more in terms of integrated capitalism. So if you think about the supply chain of capital, so where do the companies get the capital from? It goes through many, many intermediaries. Some would argue too many. The K Review, for example, would argue too many. So what I'd like to think of is integrated valuation by fund managers, integrated analysis by the sell-side brokers, trustees that for their part integrate in their view of how their money should be run, these kinds of issues, the broader capitals that your framework looks at. And I'd like to think that stock exchanges also take a more integrated view in the way that they cast listing rules. So integrated reporting by companies is arguably where it starts, but it doesn't finish with companies. Investors have a role, brokers have a role, stock exchanges have a role, investment consultants have a role, trustees have a role. So the whole supply chain of capital, or capitalism itself, needs to become integrated.
Steve, thank you very much indeed for your time today.
You're welcome. Thank you.